Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories. Midcaps lag as the street stays cautious on expiry week. A mixed earnings picture and economic uncertainty instill caution. IT consumer discretionary gain, while realty metals drag.
Syngene International slides after delivering a mixed bag in third quarter. The management tells CNBC-TV18 they are seeing healthy demand across markets and targeting high teens growth in the coming financial year. Gland Pharma, meanwhile, hits a 52-week low after revenue and profit come under pressure for the third quarter in a row.
Tata Communications' third quarter performance disappoints the street. Margins under pressure. The management tells CNBC-TV18 the company is now focusing on growth and still achieving margins between that band of 23 to 25%.
Container Corp delivers a weak quarter with a drop in EXIM business. Nomura, meanwhile, has a buy on the stock, even as it says realizations missed estimates led by weakness in domestic business.
Strong earnings give Poonawalla FinCorp and Zensar a fillip. Healthy interest margin and asset growth boost Poonawalla FinCorp's profitability, while Zensar sees a margin expansion and the stock rallies despite a top-line miss.
Okay, those are the top headlines that we are tracking on Midcap Radar today. As far as the markets are concerned, absolutely flat. Nifty is at that 18,114 mark. The high of the day, that is 18,201, has been acting as a resistance. And for now, we are at the day's low after being in the red and green for a while. Bank Nifty continues to underperform. That one is down 0.1%. Midcap Index 2 down 0.3%. So, Reema, we have been discussing this, that particular level continues to act as a resistance, and IT names, they continue to see some traction.
Absolutely. The range continues for the markets. All we are seeing is sectoral rotation, money moving out of banks and into IT. But let's, today is a crucial day for the Indian industry, with the MCA all set to decide on the next chairperson for the CCI, a post that has been vacant for the past 3 months now. Sources say deals worth $1.3 billion have been pending approval for the last 3 months due to a lack of quorum at the CCI, with some deals now nearing their term end dates. CNBC-TV18 had learned that CCI is seeking a waiver of the quorum requirement in case the full-time chair is not appointed today and the acting chair gets another 3-month extension. Parikshit Luthra has learned and reports that CCI has sought legal opinion on a waiver of the quorum requirement. He's standing by with the details. Parikshit.
Well, yes, the industry has been sounding alarm on this for a while now, saying that many high-value deals have been pending approval and there has been no movement on them at all. In fact, the closing date to finalize these agreements is nearing in many cases and is set to expire as well. And there's a lot of worry within the industry because of this. Now, what has happened? Since the last 3 months, the Competition Commission of India does not have a full-time chairperson. There are only 2 members, out of which one is the acting chairperson. The CCI, in order to approve combination deals, mergers and acquisitions, corporate insolvency resolutions or PEVC agreements, needs a quorum of at least 3 members. They only have 2 right now, and one of the persons is an acting chairperson. So this is hampering the day-to-day functioning of the Competition Commission of India. We believe that deals to the value of $1,300 million are still pending. One of them is a deal which is as big as $900 million. It has already received approval in 8 to 9 global jurisdictions and has not been cleared by the CCI. In fact, this is the only regulator that they need approval from. So what we're now learning is that today will be a crucial day where the Ministry of Corporate Affairs will decide whether the acting chairperson gets another 3-month extension or they have a full-time chairperson, which will then bring the quorum requirement to 3. In case the acting chairperson gets another extension and the CCI does not have a quorum, we believe that the CCI may write to the Ministry of Corporate Affairs asking them to invoke the doctrine of necessity, waive off the quorum requirement to expedite these cases, because the CCI also believes, and many former CCI officials also feel, that this is hampering the working. This goes against the ease of doing business doctrine, and something must be done immediately. Yes, the industry has been asking for a ordinance, but we believe that the view within the CCI is that the ordinance may not be right way forward. The MCA can give directions for waiving of the quorum requirement with the doctrine of necessity, which has been upheld in 2 legal cases in the past. So they're saying that the legal view, the legal precedent is already there. Let's waive off this requirement in case the acting chairperson's term is extended and we do not have quorum for the next 3 months. So all eyes on the Ministry of Corporate Affairs on what decision they take on the chairperson of the CCI.
Okay, this is a big one. Pariksha, thank you so much for joining us. So that will be an important cue to track as well for today. With that, we'll move on and talk about the time for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, but in case you missed it, here is today's question. What was the projected nominal GDP growth for FY23 in the last budget? And your options are A, 10.9%, B, 11.1%, C, 11.9%, and D, 12.1%. Send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Now hurry and send us your answers. Remember, we will announce the winner at 3 p.m. today. Welcome back. Well, let's talk about Supreme Industry. The stock is in focus after reporting third quarter numbers. Let's get in Mr. MP Taparia, who's the MD at Supreme Industries, joining us now to discuss the business outlook and the fine print of the numbers as well. Just to give you a perspective, the revenues for the company, they have grown by 19% on a YY basis. There is a margin contraction, though, that we have seen this time around. So for the company, margins this time around have come in at 13.1% versus 16.3%, and profits are down 15%. Mr. Taparia, good afternoon. Thank you so much for joining us here on CNBC-TV18. Well, in your press note, you have written that PVC resin prices or the raw material prices, they continued to fall till November. This has been a problem that your industry has been facing for last couple of quarters, lower raw material prices leading to inventory losses as well. What is the situation right now? Because the industry consensus was that PVC resin prices have now bottomed out. Have they seen an increase now in December and January?
They bottomed out by end November, and beginning December the prices started rising, and between 1st December to up to today the prices have increased by 18 rupees a kilo. We believe that prices are now remaining range bound, so there is no more, we don't anticipate any more inventory price erosion.
Okay. So, Mr. Taparia, if the prices stay at these levels, which is your expectation, what could the EBITDA margins for the company look like?
Overall, for this year, we anticipate it to be around 12.5%.
And for Q4, sir?
Q4 will be slightly higher because in the 9 months, our EBITDA is, I think, 10 point.
It's 11%, sir.
9 months it is 10.9%. So definitely in the last quarter is going to be higher to achieve around 12.5%.
Got it.
Okay, so Q4 will be good for you. Now, since we were talking about inventory losses and talking about inventory as well, your working capital cycle as in 9 months is 36 days, which compares to around 20 to 22 days that you've seen in last couple of financial years. What is the situation as far as inventory is concerned? Are you looking at improving this ratio in coming quarters? What is the ground situation like?
We believe that there was a tremendous volatility in PVC prices. Such trend should not repeat again. So we believe that in 23-24, things will be reasonably normal. And we should start attaining proper margin.
Okay. So could you talk a bit about...
Sorry?
Go ahead, complete your point, sir.
No, what I say is that we believe that our operating margin for next year should be better, but that we can talk in the month of April.
Sure, got that. Could you talk a bit about the volume growth? In Q3, your volume growth was 51%. 9-month sales tonnage growth was 35%. What's the expectation? Could you give us an indication of demand? Where is it coming from? And any signs of slowdown in any pocket?
Now the demand is reasonably good in all the segments, and we believe overall volume of the company this year will grow in more than 25%.
So,
low base of last year due to pandemic effect, but this year the business should be a very good volume growth potential.
okay, 25% is the volume growth that you're expecting. How much of it will come by the new expansions that you've announced? You saw commencement of a facility back in December. Is that included in the 25% volume growth as well? Or are you looking at improving on these numbers as well in FY24 once more of your expansions come on stream?
All the plants are going into production, and we have started new plants in Assam and Odisha and Tamil Nadu. All plants are further capacity being added in next 2 months. So we believe that we will have a good growth this year, and same maybe maintain good growth will maintain next year also. But then next year number will tell only month of April.
Fair. Could you give us an indication, sir, of the demand in the rural versus the urban market?
But demand is reasonably okay.
Across? Even in rural markets, sir?
Sorry?
Even in the rural market, tier 3 cities, tier 4 cities?
Real market demand is quite okay.
Okay. And in terms of revenues, you've spoken to us about volume growth, margins as well that you're, guiding for this year. 9,000 crore rupees is what you had earlier indicated in terms of revenue number this year. Is that something you'll achieve? Because 9 months you're tracking around 6,600 crore rupees.
We have already achieved 6,500 crore, and we maintain that our value growth will be around 9,000 crore. And that's the plus side.
Okay. So you, since you're saying Q4 will be better than Q3, there is a chance that you'll be able to actually surpass this guidance as well, right?
For the last quarter, maybe around 2,600 crore.
Okay. So you have some new products that you're launching, which you've indicated in the investor release. One of them is furniture cover. The other one will be protective packaging covers, product, internal cushion for artificial limb. Could you give us an indication of the kind of spend and how much do you think these new products can contribute going ahead? What is the game plan to scale it up?
No, the first is our composite cylinder capacity we are expanding. So there we invested money. Our composite cylinder capacity will go up to 1 million pieces per year, starting from February this year. We are also launching cable sealed electrical conduit, or plain and braided hoses, industrial valve, and many new items in our large range of plastic piping system. We supply 33 piping systems, and we'll be growing and adding new varieties in all the systems.
Okay. Yeah. All right. Mr. Taparia, thank you so much for joining us here today and detailing those numbers for us. So that's Supreme Industries saying that Q4 will be much better than Q3. PVC prices have bottomed out now. 18 rupees per kg is the increase that they've seen from November end, and targeting more than 9,000 crore rupees of sales, since Q4 will be better than Q3 right now. Slip into a short break. We'll get you more on the markets and stock specific action on the other side. Stay tuned.
Welcome back. Awaiting numbers from Colgate. The Q3 numbers will be coming up for you on your screen. The net profit at 243 crore is slightly less than what we were anticipating, and it would imply a slight decline on a year-on-year basis. The top line growth at 1,291 is just about 40 crore lower than our estimate. So that's a miss of close to about 3% Again, not too much. The margins have come in lower. So margins have come in at 28%. This is lower on a year-on-year basis, and it's also missing consensus expectations. The stock has seen a bit of a tumble. It's now down close to about 1%. Colgate prima facie, based on the three numbers that we have, is lower than what the street was anticipating. The miss on the top line is not much, just to the tune of about 2 to 3%, but there is a decline that we are seeing in the profitability. Margins missing our estimates by 130 basis points, coming in at 28%, and that's driving a decline in the company's profitability. So profits for the company are down close to about slightly on a year-on-year basis. The key to track will be the volume growth. It's anticipated to be between 0 to 1%. Considering that margins have declined, the EBITDA margins have come under pressure. Is there pressure on the gross margins too? And ad spends will be the key to track. Remember, Prabha Narasimhan had recently taken over as the MD and CEO of Colgate, and she's going to be spelling out the growth roadmap. So that's going to be tracked by the street very closely. Last month, she had also, held an investor day in the month of December, where she indicated that, she spent about 100 days as the India business CEO in Colgate now. They indicated that the market share is 3 times bigger than the next competitor in oral care. But just purely, Q3 numbers appear to be a bit subdued. Net profits down 3.6% on a year-on-year basis. Now, the stock is down close to about 1.5%. It's also expensive, like the rest of the FMCG pack, trading at 34 times forward multiple. A soft quarter was expected, and a soft quarter is what the street has gotten this time. With that, we're out of time on Midcap Radar. Thank you for watching Mutual Fund Corner. When we return.